It's about to get hot in the kitchen, baby. So don't invest in the companies you don't believe in, and don't invest in the companies you don't understand, because you know I got some bangers for you today. And when you invest in the companies you don't believe in and you don't understand, when it dips, you don't buy the dip, and then you sell low, and then you come back crying to me, and I'm not having that. So if you can't handle the heat of these hot stocks, then stay out of the kitchen and consider investing in the index funds. And if you like financial channels that get straight to the point, subscribe to the channel. And on top of that, I want to get to know you a little bit better. So let me know where you from in the comments. I love y'all. Now let's get to it. First one on the list is actually not even a stock, but this is one of the hottest things that ever touched the kitchen. Touch it, it's super hot. Bitcoin, BTC. Now if you got in and you started investing, when we talked about this first, when it was 23,000 and now it's 31,000. Your average cost, if you've been following the strategy, like I said, put $50 on it, $50 on it, $50 on it, $50 on it. If you've been following the strategy of averaging in, you should have a cost basis somewhere between 25,000 and 28,000, and now it's 30,000. So you just ran up with Bitcoin. Now, the naysayers tried to keep you out of that. These naysayers who tell you don't buy Bitcoin, it's at its all-time high. Now, there is some merit to that, but again, we're not buying Bitcoin because we want it in 2021. We buying Bitcoin not because we got 2021 vision or 2020 vision. We got 2030 vision. We looking out 10 years from now. We looking out 20 years from now. This is why you buy Bitcoin, so you can have a piece of the pie as the pie is growing. Now, these naysayers are the same people who told you don't buy Tesla. Oh man, how is Tesla $500? Oh man, how is Tesla $600? Now, you on the sidelines waiting. These naysayers, they are hating in public, but they're buying in private. If it was up to them, you'd be on your deathbed and you'd be saying, wish I woulda, coulda, shoulda. And I don't want that for you. So let's keep it going. I want you to increase your position in Bitcoin. I know it's at its all-time high. So what you're going to do is you're going to buy slowly. Every 2 weeks or so, if you got $300, you put $50 in, $50 in, $50 in. And Bitcoin could very well go to 40,000. It could very well go to 10,000. Let's be clear on that. But that is a deal because we know it dropped from 20 all the way to 3. And then it shot way past that, and now it's at 30. But let's keep it going. And this is not financial advice. Let's keep that in mind. So now, you can't do a strike price with something hot like Bitcoin. That's why we're doing it every other week. 50, 50, 50, bow, bow, bow. Right? Now, let's get to Zoom Info, ticker symbol ZI. Let me introduce my guy to you. His name is Brent Braceland. And not only is he a top Wall Street analyst, he is currently ranked #1 out of 7,181 stock analysts on Tip Ranks. He has an 83% success rate with an average return of 40% on 391 stock picks. Now, Brent, he said that Zoom Info is going to 59. He said it's going to 59 in the short term. And for him to say something like that, that means this thing is about to take off, right? And go even beyond that. Now, Zoom Info is a cloud-based platform that offers information organization for marketing teams and advanced data management for marketing operations. Currently, they are $47 a share, and they came down from their 52-week high of $64. Now, even though they've been knocking their earnings out of the park, they still drop like that. That's a good sign for us. That means we can buy a good company after it took a major dip. Now, remember the 5 P's. Proper preparation prevents poor performance. I want you to say it with me. Proper preparation prevents poor performance. We want to be prepared, not surprised. So let's keep it going. What are their finances like? In Q2, they expected to get 4 cents a share, but they doubled that, and then they earned 8 cents a share. And in Q3, they expected to get 9 cents a share, and they even beat that one and got 12 cents a share. They're up 2% on the day, they're up 4% on the week, and they're up 19% on the year. And since it dropped from 64 all the way down to 47, even though they got these good earnings, this lets us know that they could run right back up there. Now, 9 Wall Street analysts, including our boy Brent Braceland, they rated this one, and 9 of them, every single one, gave it a strong buy, say you should buy it right now. 0 of them say you should hold it, and 0 of them say you should sell it. What are their price targets on this? They got the high price target, it's $63. They got the low, it's $50, and the median is $55. So if you got your $300, baby, and remember, we about to get our strike prices. Bow, bow, bow. Say it with me. Bow, bow, bow. We about to get our strike prices, but I want you to think about this. Buy fractional shares or scale this up to your income level so it makes sense. So if you got $300, and I know some of you got $600 because that stimulus check. Now, if you got $300, you may never see the last strike price, and on this one, you may never even see the second strike price. But let's get right to it. We want to be prepared, not surprised. What are the 5 P's? Proper preparation prevents poor performance. Let's get it. Here we go. Strike price number 1. If you see this in the $47 range now, or the $47 range, bow, I'm putting my first 100 on it, baby. And then if I see it hit 40, bow, bow, I'm putting my next 100 on it. And if I see it hit 35, bow, 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 I'm putting my last 100 on that, and then I'm riding this one out to the moon. All right, so now, again, you may never see the last 2 strike prices. Where am I getting these strike prices from? You look at the charts and you see where are the support lines. This number comes down here, the price, and it bounces right off of that. So these are the support lines, so we base our strike prices on those, so we could get in at a good price and then ride it out. All right, so now, since the lowest price target is $50, you may have to average up. So you may just buy in now, and this is not financial advice. You may have to just buy in now and then ride it up, but we expect it to come down so we could keep buying the dip. This is why we don't lump our money in at once. But you may have to average up, because stock analysts are saying that this one is going to be at minimum 50, which is higher than the price it is right now. So you may have to average up. Now, Zoom Info, they have a competitor named Inside View, and Inside View claims to be a better management company, but they don't have enough proof yet to sway the stock analysts over to their side. All they have so far that I've seen is just data on their website that they put together on their own website saying how they're better than Zoom Info. Now, Zoom Info actually has the hard facts and the numbers, and that's kind of what is swaying the stock analysts to pick them over Inside View. So when are we exiting this one? Oh, when are we exiting Bitcoin? We're not. And when are we exiting this one? We exiting Zoom Info. You got to at least hold it for 3 years. If you can't do that, then just put this one on your watch list, because that means you don't believe in the company or you don't understand it. So just put it on your watch list and watch it run up. Let's see where it goes from there. So now, don't come crying back to me because you didn't get in, and don't come crying back to me because you didn't do your own research. So always do your own research on that. And we know that the cloud market is expected to grow over 17% every single year. Every single year it's expected to go 17. So this thing is going to double in no time. Next one on the list. And when are we getting out of this one? Again, you got to hold this one 3+ years. Next one on the list, I know some of y'all been wanting to hear about this one. And it's Golden Nugget Online Gaming, ticker symbol GNOG, formerly known as Lancadia. Now they are Golden Nugget Online Gaming after the merger. But after the merger and after that sell-off, this price just dropped like a rock. But again, if you believe in this company and you believe in the online gaming industry, this is a perfect chance to get in now. This is a perfect chance, and this is not financial advice. Only invest in the companies you believe in, and only invest in the companies you've researched and companies that you understand, because then you'll buy the dip instead of being afraid and selling out on the dip and then being mad and then crying in my comments, crying other people's comments. Buy the dip if you believe in the company, and don't invest if you don't. We know this online casino industry is going to blow up just like the online gaming industry. So now they're currently $20 a share. They're down 12% on a day. They're down 25% on a week. So if you haven't gotten in, or your cost basis is higher than $20, this is your shot to bring your cost basis down. This is how real investors do on the stock market. They're up 105% on the year. And again, don't sleep on this one because it's down. They're projected to go to 28 in 1 year and like 57 in the next 5 years. And we know the online game industry is going to blow up. So what are our strike prices on this? If you had $300, this is how we going to do it. And I want you to say it with me. Bow, bow, bow. If you had $300, our first strike price, if I see it hit 19, I'm putting my first 100 on it, baby. Bow. And if I seen it hit 17, I'm putting my next 100 on it. Bow, bow. And then if I see it hit 15, and you may never see it hit 15 again, but you want to be prepared or surprised. Remember the 5 P's. Proper preparation prevents poor performance. If you see it hit 15, we putting our last 100 on, baby. Bow, bow, bow. Now, when are we exiting this one? This was a long-term play. You could hold this one. Hold. But if you want to take profits, consider taking profits at 27 or 29, in between that range. And again, be prepared for volatility. Be prepared for volatility. AKA, you believe in the company, so you're willing to buy the dips. You're willing to take your time. You're willing to exercise some patience. So instead of our comment of the day, I got a question of the day. And I asked this one, but I want to ask you again. Let me know where you from in the comments. I appreciate y'all. And if you don't know where to buy Bitcoin, I buy Bitcoin on Coinbase. I put that in the first comment, and then we're gonna graduate to Coinbase Pro. But the safest first way to buy cryptocurrency right now is on Coinbase. So hit that first link in my first comment. You want to support the channel, use the Webull link in the first comment as well. Also, if you're trying to stay up to date on when I'm finding out these stocks, your boy, people been asking me about Patreon and Discord and all this stuff. I haven't launched any of that. So what you could do is hit me on Instagram, add me on Instagram. I put my Instagram in the top comment as well. And when I see a hot stock, boom, I put it on my Instagram. Boom, 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 right? So far, this is what I got. So if you haven't diversified, diversify. Hit that notification bell to stay tuned. I appreciate y'all. I love y'all. And I really mean that. Take care.